Welcome to the Lighthouse Financial Advisors Money Over 50 podcast with Dallas Davison and Michael Hogue. This information is general in nature and does not take into account your objectives, financial situation, or needs. Therefore, you should consider whether the information is appropriate for you and your personal circumstances. If you require personal advice, please contact Lighthouse Financial Advisors. Here are your hosts, Dallas Davison and Michael Hogue.
Welcome to Money Over 50 with Dallas and Michael. Dallas, today we're starting a new series that we're going to release every Saturday.
Yep.
And we're actually going to look at the past week that happened.
Yep.
Now, and especially while things are volatile. So while we're obviously, it goes without saying that we're in the middle of the coronavirus pandemic, at the start of the end. I don't think it's probably going to be the end, but
who knows?
Who knows?
Yeah,
but
it's I guess
with markets being volatile.
Yeah, and there's a lot going on. I read something the other day. It was a pretty clever quote to describe the times. They go, there are decades when nothing happens, and weeks when decades happen, and that's sort of what it feels like over the last few weeks. There's so much going on that it's for a lot of people, you kind of seems like there's a lot to take in. So that's, I think, what we sort of wanted to go through was a bit of an update each week on where things are at, but not in terms of what we really want to avoid doing is the market commentary of things are up.
I was just going to say that, look, like we loathe the weekly market update.
Yeah.
So it's not about that at all, because patient, disciplined, long-term investing doesn't buy into the rhetoric of the weekly market update. Yeah. What we want to do here is to number one, ensure that people don't do the wrong thing and make a mistake at this point in time. Yeah. And number two, look, there's a lot of pressure for people right now to move to cash, sort of move their superannuation to cash. Yeah. And even some of our clients, Dallas, you just had a client just last week contact you to say, hey, I know I shouldn't be doing this, but all my friends are doing it. And there's quite a bit of social pressure, because they're all looking at me like I have two heads, because I've told them, no, I'm staying invested. And they've all said that they've moved their money to cash.
Yeah.
So
it's one of those, what I guess I sort of wanted to hopefully achieve from this each week as well is to give a bit of an alternative to the news. So for the average person, like if you look at if you went, I want to keep an eye on what's happening in the economy, in the share markets, and that kind of thing. You turn on the news, and it's number one, it's constantly bad news, and it's always sort of worst case scenarios. But it's also tends to be a real narrative behind it. And so what I sort of want to give here is an alternative view of, it's probably going to be the worst news update in the world, because most of it will be geared around, we don't really know what's going to happen next, but here's how we're thinking about this sort of uncertainty. So I guess this something that I showed my wife Nicola the other day as a news headline on the Australian Financial Reviews before the market opened. I think it was actually one day this week. There was a headline that was basically Australian market set to open higher based on employment figures out of the US, or something. Set to open lower, and then when the market opened, it actually went rather than going down, it went up. And so all they did was change the headline. It basically said Australian market, finishes the day higher on US unemployment news. And go, hang on, how can the news? How can you tell me that one thing has caused share prices to either go up or down? That doesn't make any sense to me.
Yeah, look, it's the lunacy of financial media. It really is crazy, because they make it up and they have no idea why the market went up or down. Anyone that tells you that they know why the market went up or down is flat out lying to you.
Well, it would be the worst news update ever. There was more people buying than selling, and so the price went up. This week, there was more people selling than buying, and so the price went down. So
that's right.
What really did happen? I guess if we recap.
So what I'd like to talk about. Basically, the title of today's podcast is 30% off everything.
Yeah.
And what I mean by that is that right now, on Friday the 3rd of April 2020, the ASX 200 finished at 5,033 points, which is exactly 30% down from its previous highest points basis, which it reached just not so long ago on the 19th of February 2020. Now, it has been as low. So on the 23rd of March this year, it actually closed the day 36% down.
Yeah.
So what that means, that was Thursday last week. What that means is that since Thursday last week, it's actually gained 6%. In this past week, so it's moved up 6%.
Yeah.
Now here's I guess the problem. So what we're seeing at the moment is that there's certainly quite a large number of the public with funds invested in superannuation have moved to cash or are moving to cash.
Yeah.
So they're selling out of their Australian and international companies, and they're actually moving their superannuation into cash or sitting that money in the bank.
Yeah.
And we know that's happened. We know that's happened quite a bit over the last couple of weeks. So if you've done that over the last week or two, you actually moved your money to cash at somewhere between a 30 to 36% decline.
Yeah.
Now, I guess the problem is how long do you wait and leave that in cash? And the whole every Saturday we're going to be talking about this when we release this podcast because here's the psychology of the situation. So what people like to think that they can do, I believe, is they like to think that they can actually move out and pause the pain for a period of time while the market continues to fall.
Yep.
So the thinking is it's 30% down right now. 2 weeks ago it was 30% down, and we're back to 30% down now. If I move out right now and move to cash, I'm selling out for 70 cents on the dollar.
Yeah.
However, what I'll do is I'll wait till it hits the bottom.
Yeah.
Whether that be 40% down or 50% down.
Yeah.
And when it moves back up, what I'll do is I'll move back in at that point in time and catch it on the way back up.
Yeah.
So the question is though, if you did that last week, you moved out at 36% down.
Yeah.
And
what do you do now?
What do you do now? Because we're actually only 30% down now.
Monday this week was a 7% jump. Is that right? Have I got that figure? I think it was Monday this week. Yeah. So as Monday, you said, so Thursday last week. So this is kind of what's happened this week is obviously markets are still swinging sort of fairly wildly, and you're having 2, 5, 7% swings each day. But and we've talked about this before, is that's you only need to miss out on, as you said before, if you got out on Thursday last week and then on Monday you watched markets climb by 7%. Now it's I think back a couple of percent now again later this week, but if you watched that happen on Monday, and if you weren't actually paying attention to this all week, you're really setting yourself up for a world of pain, because you then constantly have to be stressing about, am I in or am I out? So it's not a game that I want to be playing. It's not a game that I'd be recommending to any of my clients to be playing.
Well, I guess if you look at this point, so the most amount of people move out at the bottom of the market. And that's why it is the bottom of the market.
It sounds like a Yogi Berra sort of a thing to say, doesn't it? Most people panic at the bottom of the market, that's what causes prices to go down is the selling pressure. More people selling than buying, and that's what happens.
And recognise that when people are moving to cash out of their superannuation fund, so just look at Sun Super. For one, I know that they've been inundated with calls over the last couple of weeks with people moving to cash. What that means, if you tick the box, move out of my growth investments and move into cash, if that's one individual and they have $300,000 balance at that point in time, and they tick that box, and the Sun Super share trader, fund manager receives that piece of paper.
Yeah.
He or she has to go to the share market the following day and say, I have $300,000 worth of companies to sell.
Yeah.
Who's interested? And of course, there's it's not just that person that ticked the box. There's thousands of people that tick the box. So they're actually going along to the share market and saying, we've got all these companies that we have to sell today.
Yeah.
And if there's not many buyers around, which there tend not to be at this point in time, because money is sitting on the sidelines waiting for what they perceive to be lower prices for the bottom.
Yeah.
The prices get nowhere to go but down. Now that order has to be filled, so they have to sell that particular day, and what they'll accept for that is whatever the going rate is. So the price will keep dropping until someone comes along and says, I'll buy those.
Mate, I heard a great story about a trader in Wall Street in 1987, the crash where the market dropped 27% in one day or whatever it was. And there's a young guy who said, buying and selling on the trading floor, and exactly what you're talking about there, where there was just no all of a sudden there was a panic to sell, and that's what dropped that price. There's a young guy who's got his Bloomberg computer screen in front of him saying this company is worth this much per share, and he said to this grizzled old trader that was on the buy side, he's going, I'll sell you, basically I'll sell at that price at $1,000 per share, for example, and the trader said, no, I'll give you 800. And the young guy said, no, but my screen says 1,000. And the old trader goes, well, sell it to your screen then.
There was denoting that there was absolutely no one there to buy.
No one's buying.
Yeah.
That's kind of, on that day-to-day basis, it's obviously, it would be confusing for a lot of people to go. So you have days where the market drops by 7% a few weeks ago in one day. And then on this Monday, the market jumps up by 7%. And there's obviously economic news and things that are happening in the background, but it's hard for someone to understand that, your shares in this company are worth, up that much, 7% or down 7% in one day. It seems like a crazy amount of money, but that's really what it's all based on, is that either that buying seller or.
Well, here's the analogy. Half of Townsville says on one particular day, we need to sell our house today.
Yeah.
And we'll take whatever the going rate is. What do you think that does to the price? Of course, the price comes down a lot. In fact, you'd never be able to fill that order, of course, because you just wouldn't be able to. But that's the analogy. So that's what's happening on some of these days when the most amount of people panic.
Yeah,
and they've signed their forms to tell Sun Super, or Q Super, or Australian Super to sell their companies. That particular fund manager trader has no other choice but to take that to the share market.
Yep.
Which is just a market like any other market. It gets buyers and sellers together and says, we're selling. There's 300,000 worth here. We're selling. There's 200,000 here. We're selling. There's $500,000 worth here. We're selling. And what we need to fill this order today. We'll take whatever the going rate is.
Yeah.
And that's why you're seeing these wild swings of price fluctuations. So I guess back to the psychology of anyone that's moved to cash, and if they moved out at 36%, which was the 23rd of March 2020, which is the bottom so far. I won't say that's the bottom.
Yeah.
I won't say it's not the bottom, and no one on earth could either say that it was the bottom or wasn't the bottom.
Yeah.
But if you moved out at that point in time, I'm sure the thinking is that the market's going to go down, and then it's going to hit a bottom, and it's going to come on the way back up, and I'll miss all of that pain.
Yeah.
What I'll do, whether that's April, whether it's May, whether it's December, whether it's next year, as it's coming back up at whatever level that I moved out from, I'll move back in. But here's like just this week alone, if you look at the dilemma, you moved out 36% down, and things have gone up by 6%. Now, the thinking usually is then that's a dead cat bouncing, but sometimes it's not.
No,
sometimes it's not. So what do you do next week if it comes out and goes up by 6% again? You're actually 12%. Out of the money in that scenario.
Exactly what I was about to say is whether you did move to cash last week, or if you're thinking and stressing and worrying about this now, that's and that's kind of why this would be a useful discussion to have each week, is to go, if you're worried about this and you're watching share markets and you're watching that kind of thing and you're thinking, I don't want to deal with this pain anymore, I'm going to move to cash. I guess that would be the thing to think about before you make any decision, is what will I think next Friday, or next Saturday, if the market has picked back up another 6% and I've moved to cash, what will I do then? What's the plan? And I think that's kind of what you're talking about, is that at the time of most panic is when prices are at its lowest. There's most amount of people selling. It doesn't tend to be in relation to a plan to say, I'm going to get out at 36% down because I think it's going down by 46, so I'll get back in at 46. So that's, I guess, the something to think about over the next week, is if you're feeling like you need to react or you need to do something, bear in mind that we could be here in a week's time. Things could be up 10%, could be down 10%, but do you have a plan in place for that?
Yeah, look, I can tell you that the majority of people would think, I'll move out at 30% down and I'll buy back in at 46% down. Look, if it gets to 46% down, it's down there for a reason, and the reason is that some more bad news has come out. There's something that's caused that. There's something that's caused that panic. Not many people would have the fortitude. In fact, I'd argue none. Would have the fortitude to move back in at that point in time, because to push it down to 46%, what's been priced in is that there's been something really bad or new development that's come out that's shocked the market into a further drop. Because where we are right now, I mean, the news that we have so far and the uncertainty of where the coronavirus is going to end up taking us and end up taking our economies and all those types of things is priced in at a 30% discount right now. So to get that to move, to 50% or 40% or whatever it is down, is some other massive uncertainty that we haven't already factored in. And not many people would have the fortitude to actually move back in at that point in time.
That's I think what again, given that it's a weekly update, we should probably stop talking about very conceptual things like we have been for the last 10 minutes. But I guess if you look at this week, there has been some bad news from an economic point of view that's come. A lot of states have put in place more strict lockdown rules and that kind of thing. And so someone who panicked and sold a week ago, or someone who moved into cash a week ago, if you'd ask them why they did that, they'd probably say, well, I think things are going to get worse before they get better. We're all going to be going into lockdown next week. There's going to be more bad news on the unemployment front. That has all come to pass, and yet markets have picked back up 6%, even after all that news.
I'm shocked that it's up 6% this week. The market in the short term will always find the way to surprise the most amount of people. And I mean, I'm shocked. That it's up. So it'll never stop surprising people.
No.
It's each week. We're going to go with the total that it's down from its previous high. So the title of today's podcast is 30% off everything. So next week it might be 25% off everything. It could be 35% off everything. So each and every week we're going to have a look at that. And because I'm convinced that the thinking is that it goes straight down and it comes straight back up. And then I can get out at 30% down. I can miss all of that pain as it drops away to 40% down or 50% down. and then it's going to come straight back up like a V.
Yeah.
And I'll just simply buy back in at a lower point than what I sold, or at the same level.
Yeah.
And what I can tell you, and you'll see this if you listen to this podcast every week, you'll see that it bounces around everywhere, and it's down 36%, and then it rallies by 6%. And then it might rally again next week, or it might drop next week to a lower position. So, I mean, no one knows, and it actually behaves like a sawtooth. It goes down, it rallies a bit, it goes down, then it rallies a bit, it goes down. It rallies. 3 weeks in a row. It stays there. It drops.
Well, that's a. I guess we should probably wrap it up, given that we said this would be a 10-minute update, and we've been going for 20 minutes already. But I'll leave you with another pearl of wisdom from. I can't remember. Maybe you know the source of this quote, but some famous.
That's
investor.
Good, because I think the way that we wrap this up, this is going to be like a complete SBS film, in that it's going to have a beginning and a middle, but there'll be no wrap up every week. There's an old. I'll leave you with a great quote that I read again the other day. There's an old. I can't remember who the investor is. You probably heard this story, but it was asked for a market commentary for the next week. You know, what do you think the market will do next week? And he just sat and thought, and then after a couple of minutes, he said, "It will fluctuate." I actually haven't heard that one. I thought that's pretty much our thoughts. It's a market update of, this is what's happened this week, but what's going to happen next week? It will fluctuate. It'll probably come out and stay straight for the whole week.
It'll just sit at 5,033 points. The market will find a way to surprise the most amount of people. We might be here in a week's time going, all right, well, we've got nothing to talk about. So
it didn't fluctuate at all.
Very good. All right. Thanks for listening.
Thank you for listening to the Money Over 50 podcast with Lighthouse Financial Advisors. We look forward to catching up again soon.